Okay, more on LLCs and S Corps. Again, the C Corp is a closely held corporation, usually done by a family. You do not sell shares of stock. You do not get the benefit of a pass-through entity. You will be subject to double taxation. An S Corp and an LLC, you do not get subject to double taxation. These are pass-through entities. Okay, also, with the LLC and the S Corp, it's much easier to qualify for the QBI, to get that 23% tax break off your gross business income. Example, you made $100,000 last year. Next tax filing, all right, 2025 tax filing year in 2026, you will be taxed as if you made, what's the math, $77,000? Not even $80,000 anymore. It was $80,000. Now you get even that extra 3%. You need to have a QBI deduction, all right? And that's on top of your standardized deductions or your itemized deductions. Now, let's talk plainly about the difference between an LLC and a corporation. An LLC is very easy to maintain. No corporate minutes, no corporate meetings, no corporate bylaws. You do have to pay that $800 every year in California, whether you have an LLC or an S Corp. Now, the difference between an S Corp and a C Corp, again, is tax benefit. For the S Corp, it's a pass-through entity, but both the S Corp and the C Corp will cost you about $100 to open up here in California with the Secretary of State. The LLC is about the same thing. Then you'll have to file something called a Statement of Information about 60 days after your initial filing. What do you need to open up a bank account? You need to prove that you're registered, a copy of your online registration with the Secretary of State, and an EIN number, right? The EIN number comes to the IRS. That will allow you to open up a bank account. Now, some banks may require you to have an operating agreement or bylaws for your corporation or your LLC. Talk to us about that. We can help facilitate it. Now, again, if you just have a sole proprietorship, you're missing the boat. You're not going to protect your personal assets like you will in an LLC or corporation. Example, you're driving down the street in your company vehicle, you rear-end somebody, it's your fault. You have $50,000 of insurance coverage, and the other party who you injured is suing you for $200,000. They're going to file a lien against your house. Protect your house with an LLC or a corporation. Now, one mistake people make is something called commingling. That means they commingle personal funds with their business funds. You have a corporate account or an LLC account at the bank. You're putting in your profits. Every time a client pays you for your service, you put that into your bank account. Now, your grandmother gives you a check on your birthday for $5,000. You stupidly put that into your bank account. Now you have commingled funds. That's called ultra vires. You have destroyed your corporation or your LLC. More questions? Call us, Beverly Hills Legal Services, 424-249-0059.